Test. Good, LA. Creations. What's up, brother? Is the market closed today? Market's open, but it's a bank holiday today. It's a full bank today, so no trades. So it's a full bank. Yeah, it's a full bank holiday. Yeah. Will it count as a train day if you win on prop? Yeah. Usually in good holiday, I would beg to differ. Personally, I disagree. But if you think it's a good trade, don't worry about me. No, I won't be trading with the bank holiday. Market not opening? No, it's gonna open. It's good, Kingpin. Yeah, it opens in 20 minutes. Yo, family, what's good, brother? Oh, just gonna take a screenshot here for my pre-market plan. Even though I'm not trading, I still want to make a plan. Um, so I'll download that. We'll leave that in there. It's always good to make a plan, even when you're not trading. Hmm. Why not trade? It's a bank holiday today, so we'll be tape reading. Um, I don't think we'll be pushing the button. Maybe if I had an eval, which I don't. Move over 200 points in Asia and London might be volatile. I think usually it's the opposite. Usually Asia and London's nice, and then because it's a bank holiday, why don't trade on bank holiday? It's usually very dull price action. Now, I will say usually the stock market is closed on the bank holiday. However, I'm pretty sure today the stock market is open. I don't think it's closed today. So we could see some decent price movement. It is possible. But I feel like I'd be better off just studying. Could you please explain premium wick on daily candle? Sure. So let's go to the micro here. I'll show you. So premium wick. So when we talk about daily levels, premium just means above price. So for example, this is market price right now, right? This is market price. Above market price, where is a significant wick? For example, this one. Okay. You can use this to gauge order flow because, listen closely, because at any point in time, failure to reach 50, the body doesn't get there, is really bearish. And you can repeat that process. You know, ICT actually taught something where, like, when you see this, the next, I guess it doesn't really work here, but that would have been interesting. Um, it's just above market price. The wicks above market price. You can gauge them. That's all. Simple idea. You see any possible trades? Yeah, I think longs are very possible today. As of right now, I think price is gonna go higher. What's good, Danny? What what's a PD range? Previous date. So right now we're currently trading back into yesterday's price action. So if we were bullish, let's just say hypothetically, we knew that today was gonna go higher. This is yesterday. Okay? Yesterday expanded this much, and so far we've been retracing into yesterday's range. We've come so far. This is actually the whole range from yesterday. So this is yesterday's range from top to bottom. We're not in a discount, but we have made it a pretty significant move. And if you run it from this leg, we are in a discount from this range. So this is yesterday's price action. So me personally, as of right now, I don't think this low right here is gonna get taken. This low from yesterday, Monday, inside the new week opening gap. I think we're trending, so I don't think we're gonna revisit this. If we do revisit this, we either are gonna consolidate or be bearish. So if we at some point in the week come all the way back here, this is assuming NFP CPI is not, because when CPI week, anything can happen on a CPI week. You can have extreme manipulation, but assuming CPI is not there, okay, and assuming we are bullish, I would not want to see price come back here. If price does come back here, for me personally, I think we're either gonna top this week if we come back here, or it's gonna be bearish. Either or. That's just how I see it. Like I basically I'm saying I don't expect something like this, where it to come all the way, take out Monday's low, unless there's a CPI, because that again CPI can do that in one fell swoop, just something like that. So that's different. Yeah, it's gonna be a no trade day for me. Hey, Gaddy, we need buffers on funded next, right? I passed my rapid. So with funded next, you don't need a buffer. However, if you request a payout without a buffer, the account gets blown. So you'll get the payout, no problem, but you will lose the account. So it just depends how you want to do it. If you want to just get an account every time, then it's fine, right? But if you want to get multiple payouts on the same account, then yeah, unfortunately, you're gonna need a buffer. We're not in new week open. We're in an old new week opening gap, maybe. When would we know that CPI will come this week? I don't know. Has anyone checked recently? Thoughts on US 30? It's great. Nice guy. Today's also today's U.S., Canadian, European bank holidays. Like the volatility is going to be low. The bond market's closed, although the stock market's open. I'm pretty sure. CPI still says tentative, so I guess we just keep showing up until it says. You need a buffer to request pen at Alpha Zero? No, you do not. By the way, guys, if anyone uses my code for Alpha Futures, please send me a message on Discord. Wow, we're early. It's 9:17. Send me a message on Discord so I can add you into the giveaway. Is it USD? Yeah, it is. If you respect bearish daily order block. No, not yet. We don't know yet. But I am running a giveaway this month, guys. So if you guys get an account with Alpha and you use my code, please send me a message on Discord so I can add you into the giveaway. The only discount is 10% right now, but I'm gonna set up. Yeah, we can do some backtest today, possibly. You think we will visit 25456? Somewhere in these lows? I wouldn't assume so, that it's possible. I don't want to see this fair value gap hold. That's why I marked this one out. And realistically, it's the hourly. I'm just narrowing it down the hourly into that one. We can do a lecture watch party. That's what I was thinking. We'll watch this until 10 a.m. See what the first 30 minutes does, and then just do a lecture watch party. What do I have for London lows? London lows are long gone. London lows are here. I had to go long on Jur 40. Good luck, brother. Are you bearish? Personally, no. How can I prove I use your code? Just send me a message on Discord and I'll get you in, bro. I can just ask you just first name if you want to make it easy on me. Your first name, whatever you signed up with Alpha Futures in your first name, just send me that, and I'll get you. It's got to be in November though. You got to use it in November. You trade today? No. It's gonna be tape reading, and then I'll do some work. I'm thinking, I don't know. I'm thinking live until like 10, maybe 10:30. If they want to see what the market does on open, like if it actually shows like it's worth tape reading, then I'll actually sit here and watch it. But if we're just gonna do like something like this the whole session, we'll just open up the ICT lecture, maybe the new ICT lecture. We can watch it together. Yeah, I do want to watch it. I'll watch it and take notes. We'll just call it at 10 a.m. We'll be watching ICT new lecture posted 10 a.m. ET. Did you take any PM trade yesterday? No, I did want the longs. They did end up playing out. I don't know if you were. I don't know if you're in. I think you're in the Discord. Yeah, I wanted the longs, and I wanted to target. I shared my targets for yesterday in the stream. I wanted the body high here. That was what I was looking for. These body highs, and we got that in the PM session, and I think final hour. I'll tell you what I was looking for and why I didn't trade it. But I was looking last PM session. So PM session was somewhere here, and I was hoping for that. Once we took out the buy side, we got at least some run on sell side. I was thinking maybe here, This happened right at 130. Like this is the 130 candle boom, and then so I was skeptical in that we got a retracement at 2. I was thinking about this setup where we just retrace into here, but I didn't want to just keep taking longs to high of day. But I think this is what I missed. And then once I realized I missed this, like 2 p.m. opens, trades down, fair value gap. We get an inversion order block. You can take this fair value gap. You can take this. And as soon as I missed that, I realized I was done. So then I was going to look back at final hour macro. And that was here. And then I also missed this setup. I saw this setup. So final hour comes down. Looks like I may have been stopped out break even here anyways. Or maybe even a loss if I trailed my stop anyway. So it's good that I didn't take it. It's just too far up for me. I wanted to see like a clean boom, you know? And I didn't really get that. I got like this, where it took 1, 2, 3, and then this was nice, I'll be honest. Like this is your final hour macro, 30-minute window, and that delivered the move I was expecting. I just needed to see a little bit more range, if you get what I mean. A little bit more, maybe like these lows, maybe something clean. There was a 15-minute gap in there somewhere, or a 5-minute. So I didn't want to force it in the PM. Those would be trades where like maybe I'd risk profits on, you know? Or if I have an eval that I'm trying to get rid of, I would just send it on those. But live account, for sure, no. They weren't bad ideas. They had good narrative. It's just the market didn't really present cleanly. Thoughts on 4-hour SMT divergence from Thursday to Monday? It is there. What's my opinion on it? I'm still bullish personally. You're in long? Good luck, brother. Nice, bro. Thank you. Got you, bro, man. Will you trade today? We're just going to be tape reading today for the first 30 minutes. If my model forms, I'll outline it for you guys, what I think is going to happen. I don't know how choppy it's going to be. But what I do know is the market could very easily open and do this. It could do that, I'll be honest. So I'm just going to be tape reading the first 30 minutes so I can put something in my journal. If my model forms, I'll outline it. Maybe throw on a paper trade. Although I want to take this paper trading account serious. I want to see what I can do with simulated 100K funds. Starting every trade with 1 mini and then only scaling. So yeah, even though it's a paper trade, I really don't want to take something meh. There is a bearish SMT there, yes. But is it bearish SMT or is it relative equal highs? That's what I always ask. So yeah, we'll do a watch party at 10 a.m. We'll watch the first 30 minutes. Then we'll watch ICT's thing. And then we'll call it. Almost blew my account on 3 minis instead of micros. Want break even quick? Nice, bro. Bro looks messy with his haircut. Appreciate you. What's good, LP? All right, 4 minutes till open. Remove this. I think honestly, like getting in long before 9:30 might be the best play if you're like gotta take something, because I think after 9:30 volatility comes in, I feel like it's pretty dead. We left equal highs right here. Very suspect. Nice haircut, thank you. You trade on bank holidays? No, I'm just gonna be tape reading the first 30 minutes and then I'm gonna watch ICT's new lecture. So we have the relative equal highs here. Don't, bro. What's your total capital? Well, right now I'm trading with my live account and my funded. So, do you mean across all my fundeds? My live account's in the 5 figures, pretty low 5 figures. And I have a bunch of funded accounts. You trade crypto like Bitcoin? I don't trade crypto personally, no. I may enter a position and hold, but I've only ever done so once. How to deal with minus 3% drawdown on a funded account? Max is 4%. You're gonna have to go down in risk and build back up. Going in drawdown and building it up is a part of trading. It's a skill that needs to be learned and practiced. Prop firms just they showed the mindset that's like I'll study this one. Um, have you ever doubted yourself? Of course. It would be so easy if there was no doubt. Of course. Are you a micro or micro gold? This is the mini Nasdaq minis. I'm 200 off blowing my XFA. What should I do? I would risk $100 on the trade, and if it's a great trade, pyramid in and try to make it back. You just got to take it step by step. Think about it like basketball. When you're down 20 in basketball, do you just quit? No, you don't just quit. Keep going. You try to take the lead away slowly. You don't just start chucking threes and hope that it goes in. You slowly got to build back the lead. You cannot get mentally defeated, and you keep trading. You know, don't be mentally defeated. Yeah, exactly. Start with one micro in the trade. Exactly what that guy said, bro. That guy knows what's up. You're in drawdown, you gotta recover. Start with one, maximum two micros, and as the trade plays out, if it's a great trade, it should play out. Move your stop and add more micros. You can easily risk like $100 to make like 400 or 500. You're gonna need a couple of those, but that's trading. You can't expect to go straight into profit every single time. You know, it's a skill that needs to be practiced. If it's a bank holiday, can you still withdraw cash? I mean, depends where you live, but yeah. What's good TP you offer today? Yeah, yeah, it's a bank holiday, bro. It's probably gonna be slow. What I'm anticipating is maybe a run on buy side and sell side, or just really slow. We'll see. That candle has some speed to it, but so we're gonna watch the first 30 minutes. Right now, we trade into this inversion. Looks like we may be able to watch a run to sell side, but my eyes are up here still because it's a relative equal highs. I think you could tape read maybe one R. No point. I'm gonna say tape read one R, just based off that speed. I do want to see what the stock market is opening at. So watch that buy side. That's what I would be eyeing personally. Those relative equal highs. Now it could get sloppy. It could come all the way back down and then run all the way back up. It's a bank holiday. That's what that's what you got to deal with if I mean if you're trading. Um, that's just how it is. Pretty slow, yeah. Pretty slow open. Pretty overlapped so far. So kind of what you expect though, right? Nothing crazy. Uh, There's speed. Takes out the buy side. I'd watch it here because we have a lot of stacked highs. So this high, this high, this high, all stacked. So I'm going to keep this marked out like this, but just know that there's buy side here and here still open. If it wants to just speed up, see how it immediately comes down, trades into that wick. See if it speeds up there. Again, not pushing the button, just simply watching. In fact, I'm journaling a potential stock position right now. I'm gonna minimize this. TikTok, can you guys still see me and hear me? Or did that go away? Did someone leave a comment in the TikTok stream? Can you still can you still see me? Is everything normal? Or did it freeze? You're good. So if I can okay, because last week if I minimized TikTok, it made it not work. But it seems to be fine if I do it now. Okay, cool. Appreciate you guys. So we're working inside that buy side. This could be a bullish order block. I'll tell you why I like this one because it has the inversion fair value gap overlapped. So I would watch that. Again, not pushing the button, just simply watching. That's a lot of speed in there. So we're already invalidating the breaker in here. Really, it's a mitigation block. So all we get is those. We leave more equal highs here. So for me, this is suspect now. This high and this high, that's suspect. Notice all the overlapping in here. A lot of wicks. A lot of fake price runs. I'm going to take a small position in NVIDIA. Hope it goes lower, but if not, a small position will do. $99, $99, $88, $99, $99, $88 for relative strength. 5 out of 5, 5 out of 5. I think that's 3 out of 5. Two three zero eight five. 23085 now. Give me 1 second, guys, while I journal a potential stock play. 91.2. Pretty good. I like it. So if you're not in the Telegram for stocks, I mean, you don't have to. You definitely don't have to. It's not. It doesn't really matter. But if you're interested, you can join. I post some stock stuff in there. It's not a signal service. Please don't join. Anticipating to make money. Um, uh, So if you guys want to be a part of that, feel free. Simply just sharing my stuff. You can do what you gotta do. No trades, no trades I'm planning. Just tape reading. And then at 10 a.m. we'll watch the new ICT lecture. Price exploded, but nothing's exploding, my brother. We take out the buy side there. So very sloppy. Not really much you do want to study here. Just study the highs and lows because there's no imbalances. Study the highs and lows. Where do you watch ITT's new lecture? He just posted it on YouTube like 20 minutes ago. What does the yellow box mean? This yellow box, I'll tell you why I marked this one. This yellow box, for one, it's a bullish fair value gap. This one was used to engineer the equal highs. So if we get below it and back above it, you can use it again for the same narrative to take out those equal highs. So notice, yes, we come down, but then when we get back above, we trade into it here, and I'll remove the body so you can see it's very clean. We get it below it, but then when it's 930, which is what we're looking for, 930 moves higher. It trades in here, then we take out the highs. Goes back up. Now we have equal highs here and here. Comes back, respects, and then takes out those highs again. So, and I'm talking about, you can't tell it here, but the wick obviously did the damage. That's all. So it's just a fair value gap extended out in time. Can we get someone to remove the boss spamming in chat? Yeah, maybe I should make some more moderators. Anyone else want to be a moderator? Gotta figure out how. It always takes me so long to figure out how to do this. Talking about TikTok chat. YouTube chat doesn't really need moderation, I'll be honest. But Isonu, I'll make you moderator anyways, bro. I'm talking. Yeah, I'll make some YouTube mods too. I got you guys. Yeah, Danny, I got you for sure. I think Danny, you might already be. Danny, you already a mod, bro. Who's here? Do you ever like sleep in? Nah, bro. I wake up at 8 a.m. I mean, sometimes, but Omar, I trust you. I'll make you a mod, bro. Any like OGs? Any like OGs who are like here always, you know? PKO. Yeah, Alex, you here every day. I got you. More. I mean, you don't have to do much. It's just if you happen to be here and you see the spam, you can go for it if you want. Yeah, just I'll give you guys the power to mute. Yeah, Zamora, you here, bro? I got you. I'm here part time. I got you, bro. Yeah, it looks like it's gonna be a pretty bland opening. You can already see how sloppy it is. Did anyone take a trade? Be honest, bro. Did anyone take a trade in this? Be honest. It's okay to admit it. Yeah, deal. I got you for sure. Five longs, two shorts. Oh, bro, someone mute that guy, bro. I'm joking. I'm joking. I'm joking. I just tried a long. How do you moderate on YouTube, bro? I don't know how to do this shit. Yeah, I'm not sure you can. Oh, it's easy. Oh, shoot. I just clicked. Wrong button. Yeah, Sonu, I got you, bro. You locked in. Got you, Sonu. Yeah, oh yeah, no, I got you for sure. You got pre-market longs? Nice. Yeah. Usually on bank holidays, if you are gonna force something, you don't want to do 9:30 open. You want to do it before. You just haven't had it set up for a week. I mean, that's okay. You good, Danny? I mean, we're in 15 minutes. We're probably just gonna open up the new lecture. I think it's a really good lecture ICT has. So why shouldn't you be trading today? Because of the price action. We're anticipating price action to suck. Yeah. Waiting for ES to grab that low. Yeah, ES hasn't run any sell side yet. So not the power in this chat. Listen, if people are talking shit, it's okay. Unless they're saying something outrageous, like you don't have to mute someone who's just talking shit personally. It's fine. But if someone is um like spamming or like insanely saying like terrible things, like outrageous, like hate, like then just get them out of here. But like I don't care. Like if it's someone just hating, like I don't really care. You can let them hate. Like be like you don't have to be like on everyone's ass. No, no, we're not gonna be trading today. I'm not anticipating the best price action. I was intending to take a trade pre-market aiming for the buy side, but I wasn't too confident. Tried to catch a continuation pullback after getting market shift at 923. So it's hard to frame here what exactly you were looking for. But you said a market structure shift at 923. 923. This? You went long at 923, targeting this? How's Nvidia? Well, we will just got in. It's our first position. I'm hoping to build it up. I'll be looking at anywhere in here. I'd probably have to see full closure, like 188, to get back in another position. I'm trying to build the position going into next year. In fact, let me make sure. Me last year would definitely be itching. Yeah, same, bro, same. Maybe not last year. Maybe 2 years. Trying to build the position up. Ideally, could be a hold into end of year or January 2026. Yeah. Previous day told 180, 193. Previous day, yeah, it's fine. All right, honestly, should we just watch the ICT lecture now? Are your stocks long-term plays? Mostly, like long-term being we. Usually, my average time I'd say is like 1 month, maybe like 1.5. How much usually you aim percent? What do you mean aim? Like gain? 10% minimum. 10% on the stock minimum. If there's no at least easy 10% gain, I don't look for it. But I'm kind of just trying to build an Nvidia position long term here. What have you been working on in the lab? How can I show without showing? Show you. Oh, this isn't even. I've been studying stop loss placements, pyramiding, risk management protocols, scaling in, what not to scale in, targeting, all the trade management stuff. Yo, guys, honestly, I think we just open up the ICT lecture. Does anyone here really still want to tape read this? Because this could do this the whole day. Like, I'll be honest. I think we just open up the new lecture, put it in 1.5 times speed, and we watch that shit. Who's with me, bro? Who and me. I think we get it done. I'm sure we can all learn something. In my opinion, I still think we can maybe move higher, but yeah, there's people like actually trading, I think. Interesting. Listen. I don't care how much money I make. I'm not buying YouTube Premium. It's a waste of money. Just skip the ad.
Hello, folks. How are you? Hope you're doing
Can
well.
you guys hear this?
So you're probably wondering, where has ICT been? I have been rambling up and down the east coast of America. We took several road trips. Went to Cape Cod,
This
stayed up in
YouTube stream will
Maine
probably
for a little
get
while,
taken down. I'll be
and
honest, but
drove all the way
whatever.
down to the
Because I think this is
southernmost
like
tip of the
Washington.
United
I know you're not
States,
allowed to do this
mile
shit on
marker
YouTube.
0, Key West, Florida. And then we stayed a couple places on the Gulf side of Florida, and then made our way home. I don't quite feel well today still. Ate something bad. Went
Yo,
to a
listen, if
restaurant,
you're
and
on TikTok,
I guess didn't agree with me, so
you got to move
I'm
your
going to
phone
share something
sideways.
with you
I can't
today.
fix it on
And
mobile
then
because it's 1980.
my son's who
So
I'll be
either
teaching
put your phone
later today as well.
sideways
I'm going to build
or
on
just
what I'm
come to
showing you
YouTube chat.
as well with this lecture. So it isn't going to be long, and it's only going to be focusing on NASDAQ simply because I don't have the time or energy to devote to anything else. But what
If
I
you're
said
on
about the
TikTok
dollar
and you
index,
can't
you can
see
look
it,
at
you
your
want to
chart to
watch
see it
with
has
me,
done that. And then Euro dollar and cable have done as well. Higher dollar
also
is
be
what we're
taking
looking for.
notes.
I was
Actually,
looking for,
maybe
let me
not.
say it
We'll
that way.
see.
So this is a December contract mini NASDAQ futures review right there. And I just included some narration to narrate the underlying bullish overflow that we were looking for. We have a bullish fair value gap here as well. Traded down into that.
Someone said, "Holy dump, look." Bro, yeah, I mean, it's not dumb, bro. I mean, yeah, we're running sell side. It's fine.
You'll see this appear in the lower time frame charts. And we have this big down close candle here. That's the bullish order block. The change in the state of delivery is the opening price. And you can see how we dropped down into that here last week. And then we started trading here and moved up into that volume imbalance. So let's continue with that idea into the daily chart. And I graded the premium wick of the highest candlestick here. That's the 30th of October. And that same weekly volume imbalance is being highlighted here. Interesting to see how the bodies are respecting that. And we dropped all the way down into this discount wick. And notice that we couldn't get to the upper quadrant before we came all the way back up. So that's usually indicative of bullishness or strength. And we traded right back up into that volume imbalance. And the bodies have stopped dead in its tracks right there. So that's probably random.
This should all make sense to
premium
everyone so
wick as
far.
well. You can see how they used that so far for today. And then we will drop down into an hourly chart. And we have a buy side here, sell side, which was taken right below there. Just a small little drop down into a bullish fair value gap, traded right to the top of that. And notice it didn't get to the upper quadrant of that daily wick. As
Those all
indicated
make
here,
sense.
right there. Okay, so notice the price. That's this level here. And it fell just short of reaching into it, but it hit the top of the fair value gap here on the hourly chart. So what we're doing is we're looking at the price continuum from higher time frame down to lower time frame. And you can measure the importance of the PD array's effectiveness in terms of providing discount or resistance, okay, or the cause and effect, if you will, of how fast it should repel from price. So we have discount sensitivity and we have premium sensitivity. The PD arrays need to be measured that way. It's not simply enough to say, well, it's old support, old resistance,
It's 1.25.
that type of thing. You're measuring its inability to even trade to a specific level and staying within an underlying narrative. So we traded down into sell side, but we couldn't even get into.
You didn't miss much, bro. He's just outlining the order flow on the weekly. So if anyone's lost, I'll just do a quick recap. The order flow on the weekly, how we had the wick here, we had this volume imbalance, we went below it, came all the way down, we failed to get to the first quadrant. That's discount sensitivity. And we claim all the way back up. So that's really discount sensitivity. That explains the next day being bullish. This was yesterday.
Tracks right
and
there,
then
so that's
today,
probably
we're
random.
working inside that volume imbalance on the daily.
Hi, we're Fiverr, a
hell
global
no,
marketplace
bro.
with freelancers offering thousands of digital services. Search for the
Feels like I got kicked in my stomach.
It's not 2x, it's 1.25.
So something they didn't make it well, and it was fish. So that way you know. I'm a big fish eater, and I guess they had something there that they didn't get cooked properly.
So now
So we have a
50-minute
buy-side
chart.
pull here on an intermediate term basis, and then we have sell side resting right below here.
Those equal lows. We talked about this yesterday.
And then we have
We
this
saw that
newly
yesterday.
opened gap. I created that. So we've had a couple attempts to trade higher in here. How we use this volume imbalance for the remainder of this week will be indicative of what we do going forward. So if we can manage to get to the upside of it and then defend the upper half and never trade
So
back to the
notice
lower
the
half
new
of
week
it,
opening
that's
gap.
bullish. If we break down to
Sell
the low of
side.
it and then defend the lower half and trade no higher than the halfway point of this imbalance that's shaded in white, that daily and weekly volume imbalance, that's what this white segment of rectangle.
So he's basically saying this weekly volume imbalance is going to tell us how price should trade. If we respect 50% when we get above it, bullish. If we get below it, respect 50% going down, bearish. Then you'd expect stuff like new week opening gap, etc., etc.
That's
personally, I favor the long narrative, but
for the bias, determination for the rest of the week. Today's an election day or something to that effect. I think, if I'm not mistaken, I think something to that effect. So and it's going to impact obviously the volume that's coming into our trading day. Coming down to a 5-minute chart.
So just reviewing yesterday's price action. We
already
kind of did this.
Lower time frames, it's normal to see that type of thing. We broke lower and then
ourselves.
That's premium sensitivity in the upper quadrant, drawn back down to equilibrium.
This is today.
The midpoint of that, which we call consequent encouragement, and then
today's price action
into the lower half to the low, and then if we can manage to do that, here is sell side resting here.
This is the most recent video.
I don't have it highlighting the actual price, but we'll just call it 25,455. It's a good approximation. So that's where the daily sell side, and the buy side on the daily boundaries would be up here. It's at around 25.8.
So he's just, this is important. Let me annotate this for you guys. He's basically talking about right now that your sell side is here and your buy side is here. So he's still saying we're still inside this range and it hasn't been determined which way we're likely to go. The volume imbalance that we're working in right here, this volume imbalance, he's saying is going to be indicative for the week. So extend that out in time. If you want, you don't have to do this. And that'll determine whether we run the buy side here or the sell side here, right? So that's the volume imbalance we're working in. You can leave that on your chart if you want. I don't think it's too important, but not that I think it is, but you don't have to leave it. It's up to you. So he's just noting the buy side here and the sell side here, and we're inside that range, and we're working inside the volume imbalance, and that's what will be indicative of the future. Personally, I lean longs, but that's just me. Anyways,
25-ish or something to that effect. So those
yep, you can grade it. I'm not going to grade it, but you can grade it.
Extremes that I would look at, and I'm saying that I want to determine as
NQ4,
prices
yeah, it's
today,
pretty similar.
What is it more likely to draw towards? And what does that mean? Well, if we start making lower runs, then it might want to run and take up these sellovers here. If we move to the upside, then my focus would be not just simply getting above here, but drawing up to here. It need not do it all in the same day today, but it's just helping me frame modularly what the bias should be. I've been away from the markets for a couple weeks now, so I'm trying to get myself acclimated back to what we're doing at the moment. So this is the type of thing I'm doing when I do those types of things, when I go away or spend time away or after a holiday, a long break, like I'm getting ready to do at the end of this week. That's my typical hibernation, ICT like a bear, proverbial, where I'm spending time with my family and not so much
watching
in the
ICT with ICT.
I enjoy the holidays, and that's why you won't see much of me.
Hey,
hell no. He got this shit on aggressive.
Stress, snacks, and no patience. What's my fast?
Okay, and here's the 1-minute chart. And I want you to take a look at what I'm showcasing here. This is kind of like the lecture, the teaching. So I'm going to be teaching my kids sessions today, session trading. So it's not dependent on daily bias. It's not dependent on weekly bias. It's not dependent on anything except for what's available in the marketplace right now.
You have said there's a tape read long setup, so I would just
trust trading the London session. If you're a trader that wants to trade London, I get a lot of questions sent to me in email and in the comment section of my videos. Yes, there's a lot of you. No, I'm not trading this. There's too many of you. And if I highlight one comment, it breaks the hearts or hurts the feelings of the individuals that maybe posted it 30 different times and spam my comment section. If I see your comment, it's noteworthy, not because I'm trying to discount anybody's question, because I understand why you're asking, but most of the things that post to my comment section are questions that are answered if you simply just watch the videos. And I know you're trying to save time, but I'm trying to save my sanity, because I could not ever service all of you by having a response to every post, every email, every text, every post on X, everything that's sent to me. I wouldn't be able to do anything. So trust me when I tell you 99% of things you're going to ask me is already answered in advance because of the natural continuity of the content. But if you're trading London, one of the things you want to do is develop an understanding of the opening range. And the opening range for that is 1:30 in the morning, Eastern time, to 2 o'clock in the morning. And when we have that indicated, we can look left, and you'll see that we have high, and right before 1:30, we have relative
Interesting.
equal highs. So it's going to be about that. Buy side. We'll get to that in a moment. But we start at 1:30, and then we rotate lower and draw back down to a lower discount. The first presented fair value gap here during that 1:30 a.m. to 2 o'clock in the morning is my gift to the community, because algorithmically, this is what price is looking at. If you're trying to
Okay,
trade London session,
interesting.
if you want to trade London at the
Okay.
kill zone, whether you're
Sauce.
trading Forex, whether you're trading
Sauce.
indices, commodities, currencies,
What's
whatever,
that
if it's
UK
trading during
time?
this time, it's going to use this logic.
I don't know UK time.
I
You
don't
got to
want you to
make your
believe me, I'm just
chart
calling
New
the charts
York
and
local
study
time.
it. Now, differentiating first presented fair value gap when we're using opening ranges, not the silver bullet. Silver bullet's like the first one that forms after 10 o'clock. Inside that 10 o'clock to 11 o'clock.
Yeah, new video.
When I taught that, that's very generic. But when we're using opening ranges, which are defined by 30 minutes, not 15 minutes, not 5 minutes, it's 30 minutes.
Bro, he laughs. Listen. ICT laughs every single time he mentions the opening range is 30 minutes, not 15 or 5.
You want to look at displacement.
I've heard him say it
so
so many
displacement
times.
is the
He laughs
division
every
from
single
what
time.
everybody thinks they know about and writes books about my content on Amazon, which is not correct. Nobody has a book out with my stuff correctly. And I say that because I get so many questions sent to me. Do you like this person's book? I haven't read anybody's books. I get excerpts and things that people purchased from these writers that are parroting me, but they're not even doing a good enough job of doing it correctly. And they're twisting it and trying to make it something of their own. And they're putting my name on their book because it's a draw. It's going to make people want to buy it. Just don't do that, folks. Okay, I promise you.
Nah, no training today. Bank holiday.
From me directly is the right. Anything outside from me is going to be someone's persuasion added to it. Okay, even the best of my students are showing themselves making lots of money. They're bringing their own little twists to it because they're trying to find themselves. And I say that respectfully, but it's diluting the importance of knowing what it is I've taught and keeping it pure. And this is one of those lectures today. Why wouldn't I look at that gap right there and call that the first presented fair value gap?
True. Why you not? Because, yo, this is going to be sauce, guys. We got to lock in.
If you take a look at that swing low right there, after we've taken buy side, as we're entering the opening range, we took buy side, and then
you don't really get what he said about 130. So ICT is saying the opening range. So just like for morning session stock exchange or New York session open, 9:30 to 10, your 30-minute interval, that's your opening range, first 30 minutes, right? Now ICT is saying for London session, that same concept can be applied from 1:30 a.m. to 2 a.m. So going into your London kill zone, which is 2 a.m., right? Kill zone is 2 a.m. to 5 a.m. Going into that session, your 30 minutes before 2 a.m. is your opening range for London. That's where you look for your first presented fair value gap in London session. Which video is this? Is the most recent video
it just displaces. Posted. So that fair value gap here.
But look, now he's teaching why he's using the second presentation. There's two fair value gaps here. There's one here. I don't know if you guys can see this, but there's one here and there's one here. He's explaining why not to use this one and to use the second one. It's because of the market structure shift.
We took buy side, closely. And then it displaces. So that fair value gap here hasn't even taken out that low. But this gap engages that low. It's laying inside of the proximity of that low liquidity. So it changes market structure, bearish. And now we can use this inefficiency to inefficiency, which is what? Suspension block. Now this first presented fair value gap is a bearish suspension block. And it reacts and respects the equilibrium point of it, which is classified as a consequent encroachment because it's a gap, it's an inefficiency. It's not a single candlestick like an order block.
Why do you call it suspension block then? You call it suspension gap.
Because it's got a volume imbalance to the high end and the low end.
I'm going to tell him to change that shit to suspension gap.
So it's the distinction between the displacement drawing the importance to that individual imbalance. It's not just simply, well, there's one right here. So why didn't he use that? He's cherry picking. No, the logic is simple.
All right, so let's make some chart annotations for ICT type shit. For anyone who's lost, Suspension gap sounds okay. Bro, suspension block doesn't make sense, bro. How can it be a suspension block but then have a mean threshold? I mean, sorry, a consequent encroachment. So, for anyone who's lost, pay close attention. 1:30 to 2 a.m., right? Very similar to 9:30 to 10 a.m. So this price interval, this is from today's price action. You know what's crazy, bro? Like, yo, this guy, every time he decides to make a lecture, like, shit, goated, bro. I'll be honest. Anyways, let's do this like this. So 1:30 to 2 a.m. New York time is your London session opening range. Okay. Okay. This is where you look for your first presented FEG. Yeah. So there's two fair value gaps here. There's this one and there's this one. Okay. Let's do it like this. And I'll make this one in big black lines. I think the easiest way would just be put that in there. This is probably boring for some people, but I don't care. Lock in. So you would normally use this one, but we're actually going to use this one. Because and that's exactly why. This market structure shift. So I'm assuming this can also be, the reason this is important is because you're probably going to also want to use this in the morning session, right? It's probably going to be the same. So hopefully that note is pretty clear. And then obviously 2 a.m. to 5 a.m. London, kill zone. All right. So we'll keep that up. Let's go
Simply
back to
what I'm teaching
watching.
you here. There has to be some kind of basis as to why that imbalance should be used. And it's because we have shifted market structure lower after buy side taken. See how all the things I've taught
Yeah, that's
cumulatively
important
over
too.
years
After
and
buy
years and years,
side.
I've given you small pieces of it. Not because I want to starve you, not
Why
because I
don't?
want
Why
to
do
do
you
anything
not?
except for make you understand it the
Because
right
of the
way.
market
You
structure
won't
shift.
appreciate if I give it to you in one block. Because look what it's like when
And
you watch a
remember,
video.
this is probably going to be useful for 9:30 to 10 too, right?
They're very
This
long.
is
They're
the
very
most recent
wordy
video,
because
guys.
I
Most
want to
recent
be
video just posted
concise.
today.
I want to be very thorough. And because this is a very dense topic, it requires a lot of bandwidth on your part as the student because You're going to have to come back to these topics multiple
daily
times. You're not
research
going to
levels?
learn it by
Yeah.
watching one video. One video, one time through it isn't going to be sufficient. You want to master these things, so you have to understand the details I'm sharing. I have a lot of information that are packed in small videos, and for me, a four-hour video is small. For most of you, it's too
There's
much.
a specific
You can't
reason.
do it.
Because of the market structure shift. So ICT is saying it's not just first presented fair value gap, the first one that forms. Is it always a market structure? I mean, we'll see. But I think it's the idea that's the whole narrative behind. So let's say hypothetically the market is just consolidating, okay? If the market was just consolidating, we don't really want to use let me make this centered. We don't really just want to use the first fair value gap. We want to have a narrative behind it. The fact that we took out the buy side here, the equal highs, and then the fact that we took out this high and then got the market structure shift, and that one is like, this one is way more important. This is the first fair value gap that's way more important than this one. I'm sure he's going to talk about it more and give another example now. It's just the idea that this fair value gap has all the narrative with it because it overlaps with the breaker, the market structure shift, right? It's about the narrative. He's basically saying the first present fair value gap, don't think of it. I'm assuming it's what he's trying to get to.
Go somewhere else.
It's not so much just a pattern. It's
or watch
more
people take
about
my videos and splice
the
up
first
and
present
remove
fair
the
value
rants.
gap that
The rants is what makes this
has
stuff
narrative,
work.
you know, like meaning.
Otherwise, you're just demonstrating things that I can do in my own
Yeah,
hands,
131,
but you're not
132.
communicating it to the viewers of your channel.
Starting after 130.
You're just looking at it for ad revenue. So nobody's making money learning the short Cliff Notes version. They're making money by learning the deep aspects of what it is I'm teaching. And this is what I'm referring to. Having this imbalance here because it's toggled to and tethered to that shift in market structure. It's laying across that. You see that? So
That
there's
one
no
was like
necessity for price to get back up here.
150,
And when you see these
145 or
mentors,
something.
they're just
150 maybe.
trying to tell you something they think it
It's
sounds
today's price
intelligent.
action.
If the price could go back up there, then I'm really going to be interested. If the market goes up there, I'm not interested.
145.
I want to see that stay open as a breakaway gap. But the first
Yeah,
position
so that's a
gap
breakaway.
here is the tradable, executable PD array. And you qualify and confirm that by what I'm saying here. The displacement inside the opening range of 30 minutes before 2 o'clock in the morning.
The
same
displacement.
application is done with 9:30 to 10 o'clock in the morning. The same approach is being used there. So it's not a matter of he's picking and choosing, cherry picking. Because if you look at the times I've called the very specific PD arrays, the fair value gap that I'm utilizing, they're working. And the other ones that other people will say, why do you use this? Why? They're not used. I'm using things like this. This is one element of logic that is, again, it's my work. It's not somebody else's stuff that's rebranded. You're never going to see this stuff rebranded before me. But you're going to hear it always in everybody else's mentorships now. Now, I'm going to take it one step further. This imbalance here, it's the first candle in the opening range. If it's bearish and it's a buy side bounce, sell side efficiency, this will act as 90% of the time. If it's bearish and it's a buy side bounce, sell side efficiency, this will act as 90% of the time. And listen to that rate, okay? 90% of the time, that's going to be an inversion fair value gap that's bearish. Why? Buy side's been taken. It's
Yo. Well, obviously, if it's bearish, it's going to be 90%. But, okay. So, let's screenshot this, and then let's get to the second point. Because ICT just dropped another gem. He just dropped another gem. So, what we're going to do is we're going to screenshot this. And then we're going to clear this up. Okay? Now we're going to take our attention to this. He's talking about the first fair value gap. I saw the overlap. I didn't think he was going to say what he said, though. But let's see exactly what he says.
starts the opening range, fair value gap that says 90% of the time. If it's bearish and it's a buy here, it's the first candle in the opening range.
First candle.
If it's bearish and it's a buy side bounce, sell side efficiency, this will act as 90% of the time. And listen to that rate, okay?
Yes, Ryan.
90% of the time, that's going to be an inversion fair
It's the
value gap that's
displacement
bearish.
that's telling you, yeah.
Why? Buy side's been taken. It starts the opening range of 30 minutes. It's an imbalance, and price rolls back over top of it. It should stop at the consequent encroachment level and not leave any bodies on the upside of it. And it doesn't even get close to it here and leaves the upper half untouched. Trades into it here, gives you one more little kiss here, goodbye, and off to the races it goes. So what did I
One
just
more
teach you
little
here?
kiss.
I taught you how to use the opening range for London session. I taught you how to use the opening range for 9:30 to 10 o'clock in the morning when you're trading indices. Stop listening to these people focusing on a 15-minute time window. That is garbage. It's trash. It's absolutely limiting your perspective. It's the first 30 minutes. It's the first 30 minutes. And by applying this idea of was there liquidity taken? You can clearly see that here. It runs above it. It absorbs all that. It throws down a fake bull flag. I teach this in my 2016, 2017 paid mentorship lectures that are on my YouTube channel. Just look for the playlists. That's a false bull flag, and it breaks down. And then you can trade into the inversion fair value gap. It's inversion, by the way. It's not inverse fair value gap. Please correct yourselves, gentlemen. Okay, you're you're not using the correct vocabulary. But it hits it beautifully here, and it starts drawing down to the sell side here, down to the consequent encroachment of the higher time frame ranges that we graded, and then created a sell side liquidity pool here. And now we're entering another time window. It's the what? The New York open kill zone. So the New York open kill zone is what? 7 o'clock in the
7
morning
to 10.
to 9 o'clock in the morning, or 10 o'clock in the morning if you're trading Forex. Now here's a small, simple little caveat here, okay? At 7 o'clock in the morning, I use the information I get from 6:30. If you remember back when I was doing paid mentorship, for those that were part of that, in the lectures, I would always refer to how I would get up in the morning. The questions would come by way of what's my
I
routine in
rated
the
that
morning,
there's 200
when I
people
was
from
trading Forex.
TikTok who stayed to
I would get
watch
up in the
this.
morning. If I didn't trade London, I'd get up at
You're
least by
locked in.
6:30 and get a feel for what the market was done. What does that look like? What do I mean by that? Well, just be mindful that this is the low with sell side, and we had this retracement here. What just took place? Buy side, with this run up in here. Okay. So now we're going to go to the next slide. Here's that same sell side here. Okay. Now at 7 o'clock in the morning, go back to 6:30. What took place? 6:30, we had buy side taken. It's simple. They've rated buy side. They've left sell side intact. All part of a larger draw on liquidity that's being pulled lower across all the higher time frames. So if that's the case, we can now look at, now here's the caveat for New York. Okay, why am I showing you 7 o'clock to 7:30 and not 6:30 to 7? Because I'm encompassing both Forex, I'm encompassing metals, I'm encompassing oil, energies, all of the assets. Okay, and to make that streamline, you use 7 o'clock because that's when all the algorithms fire up. There's not one algorithm that runs everything with the same tentacles and everything at the same time, but every instrument is ran algorithmically, and it's ran by a price engine that is completely and utterly controlling price. And the illusion is you think buying and selling pressure causes these fluctuations to move price higher and lower. It's not. But they all begin, they come online basically at 7 o'clock in the morning. And then what you want to do is look at the reference points that I teach with my PD arrays within
This
the
is his
context
most
of a
recent
narrative.
lecture.
Meaning, what
He just
did
posted it
do
today.
at 6:30? Well, at 6:30, it took buy side. It's pulled down into sell side, and it left this sell side liquidity pool, but all these buy side liquidity pools here was rated air. We broke lower. These relative equal lows were taken, and then we traded right back up. Did that high take out that high? No.
No trading
They traded
today.
right
Bank
inside this
holiday.
wick. Grade that and see what that gives you here. And then we entered the 7 o'clock to 7:30 opening range for New York open kill zone, encompassing Forex, metals, energies, indices, you name it.
Don't confuse that with 9:30 to 10. I feel like a lot of people are going to
and see
confuse
what that
that.
gives you here. That high? No. They traded right inside this wick. Grade that.
I feel like I need to restate this because some people are going to misunderstand. So let me take this. So I think some people are going to mistake that with the kill zone and New York session. So let me screenshot this. And I think everyone understands the London stuff, right? So, okay. Everyone was saying, yeah, I mean, we ran out the sell side, broke down again, took out buy side, sell side. Looks like we'll probably make a lower low. How to watch up until here. That low, the hourly. But anyways. Okay, let's fix this up here. I'm going to assume...
Back up.
Okay.
Did that high take out that high? No. So it took buy side. What did it do at 6:30? Well, at 6:30, it took buy side. It's pulled down into sell side, and it left this sell side liquidity pool, but all these buy side liquidity pools here.
I
was
got you,
rated
Sip.
there.
I got you. 1 sec.
We broke lower. These relative equal lows were taken, and then we traded right back up. Did that high take out that high? No. They traded right inside this wick. Grade that.
I don't
and see
think
what
we're
that gives you
bearish.
here. And then we entered the 7 o'clock to 7:30 opening range for New York open kill zone.
Okay. Make sure we label these correctly. Opening range for New York open kill zone. The New York open kill zone now he says 7 to 9, but 7 to 10 for Forex. We're just gonna go 7 to. How do I want to label this? I wonder if he's gonna say use 9 to 9:30 then. That's good. That'd be cool. Let's see if he says that. He might say that.
Encompassing Forex, metals, energies, indices, you name it. This is the way you can do it, where it's a general approach to doing it. It's the only kill zone that you apply it this way. Everything else is 30 minutes before. Okay, so the market runs up, creates a high, and then one more time rallies and takes out that buy side that's created there. So this is engineered liquidity, and then we have a shift in market
Minus
structure.
1,000 today on a bank
Below that
bro, on a
swing
bank
line.
holiday too, bro.
This
You gotta like
gap
be more
right there,
okay to
entire
not
thing
trade,
here,
you know?
that has to be incorporated.
The
with
first goal of
this
trading,
low because
capital
it's tethered
preservation.
to that. It's this low that's being shifted with a bearish movement in price. This bearish fair value gap, midpoint, consequent encroachment. The body stops dead in its tracks below it. It's allowed to wick a little bit above it.
Yeah, that's
and then
nice.
comes right back down, gets it one more kiss here, and then runs aggressively down to the sell side. Notice that the mechanics are simply this.
Hello,
This is your
traders.
answer.
In this video, we're going to
Fuck
introduce
this guy,
the
bro.
Smart AI
Yo, Ryan, this is his, I don't know if Ryan's still here, but this is exactly what he was, again, we don't need all that. In fact, why is this so damn high? So same narrative applies as before. Same narrative applies as before. No, hold on. I want to make sure I'm marking the
indicator,
right one.
which we developed.
The run for the buy side.
Yeah, he's marking the higher one. Okay. Now this is going to be a little bit off because I'm on the micro, but it's okay. Well then, wouldn't he use this one? Am I tripping? He would be using this one, right? Because that's the one with the market structure shift. Hold on, I gotta check the mini because it's just completely different. It's just completely different. So he's using, yeah, wouldn't he using this one? Oh man, this shit already looks like he's using this, which I understand. The market structure shift's embedded with this one. Nah, this is the one that it's this one right here that gives the market structure shift, not this. Yeah. Yeah, M&Q is different. No, look. Yeah, I mean it worked. I'm just confused to why Well, wait, hold on. Did he even say the first presented fair value gap?
Your
He didn't
chart
even say
simply
that.
this.
He just said bearish
Runs
fair value
aggressively
gap.
down to the sell side. Allow the wick a little bit of midpoint bearish movement in price. This bearish fair value gap,
Yeah, he didn't even say first present. He just said bearish fair value gap.
midpoint, consequent encroachment. The body stops dead in its tracks below
So
it.
it's chill.
It's allowed to wick a little bit above it, but then it comes right back down, gets it one more kiss here, and then runs aggressively down to the sell side. Notice that the mechanics are simply this. The run for the buy side, when you're looking for directional runs that are high probability, low resistance liquidity runs. Not high resistance liquidity runs, low resistance liquidity
I
runs.
can do this every time.
Always
I usually
have
do this on my
an
own.
opposing
I can do it on live stream if you guys like it.
run in direction before it happens. Meaning, if you're bearish, there has to be some measure of buy side taken before you enter the trade. You have to have that. In this case, we see it here. It rallies and then rallies one more time. That's a turtle soup, not Linda Raschke's turtle soup. Okay, it's the idea of a false breakout. My version of false breakouts. I like the little term turtle soup. It is not taking anything from that book. The idea of a false breakout, it is essentially that. I didn't invent false breakouts, but my incorporation of how I use them is not in any books.
Bet Ryan, let's do
They're
it.
in
I
several
can do it
dozens
on
of
live
books
stream.
on Amazon and other places now, and it's Smart Money Concepts, which is my stuff being prostituted. But it's my application of looking for false breakouts. That's, I guess, basically say simply this: the right ones chosen correctly, the times and instances when it's highly probable that it's going to work. And it's not simply limiting it to a 20-day high or 21-day high or low being taken, because that's all turtle soup is in Linda Raschke's Smart Money book, or Smart Money, Street Money, not Smart Money, Street Smarts. That's her book, okay, with Linda and Larry Connors co-writing it together. But that turtle soup pattern is simply just using a 20-day high and low, because the turtle traders use a 20-day high and low breakout. So it was a long-term trend following model. But it was very influential in terms of helping me determine the idea of stop reads and false breakouts, because I was very
Good, Devin.
infantile when I first started trading. I was doing everything that everybody talked about, and I lost a lot of money doing that stuff. So what I wanted to do was I wanted to spend my life trying to figure out the instances where these things would manifest themselves
gives us
on a
a
scheduled
story.
delivery. That means time-based. That means it's going to
Schedule
occur
this.
every single day at a specific time. Okay, so I created these opening ranges to focus in on that nobody else talked about. Okay, you're never going to hear 30-minute opening ranges before me. The very specific elements I'm teaching you here, they're never framed anywhere like that. The importance of what you're looking for, the salient points to pull out of price action, that's never been taught before. And I have to do these things. I have to talk this way, not because I feel threatened by any of these goobers. I have to say this stuff. I laugh at it, but I'm feeding
We're just gonna
AI,
do it on the micro
because when people say things about me or they question the origin of the things I
because we already
teach,
have it.
they originated with me. Anytime I've ever had any influence by someone else, I've always given them credit. I've always done that. But even
mean,
the
I
things
don't
that
think-
I give them
listen,
credit for, they have no place.
Is anyone confused here? Because I really don't want to. Personally, I don't want to put this in my journal, but I can break it down. Is anyone confused? So 30 minutes, the first 30 minutes, going into the New York Open kill zone. You're kind of confused? What you confused about? There isn't anything too, like, the main takeaway here is, which we already understand. Look at what 630 did onwards. Okay, so 630. He's not using it for New York Open like 9:30 Open. He's using it for 7 to 9 or 7 to 10 for Forex. Okay, so the idea is it's the same exact thing when you look for highs and lows before 8:30 when he teaches 2022 model. Look at what 630 does onwards. Okay, 630 goes up, takes the sell side. We move up, and then going into 7 to 7:30, we take out that high and then break. Okay, so that's your opening range for New York kill zone. So for 9:30 open, you would use 7 to 9. No, 7 to 9 is your New York Open kill zone. New York Open kill zone. That's for now 7. That's for indices. Really, it's 7 to 10 if you want to include Forex. That's how ICT taught it in 2016. So for 9:30 open, you use 7. No, for 9:30 open, well, the opening range is not. Remember, this is unique because of all the other algorithms that operate starting at 7 a.m. That's why we're looking at 6:30. So this is unique, and the reason he's using these specific times is because it's also including forex, metals, commodities, bonds, all the markets, right? That's different than 9:30 open, because from 9:30 open, you're looking at 9:30 to 10, right? 9:30 to 10, that's your opening range. Here, you're looking at, well, I'm assuming 6:30 to 7, but I think he's still going to get to that, so we'll confirm. You're looking at 6:30 to 7, so it's not the first 30 minutes; it's 30 minutes before. Does that make sense? Yeah, for 9:30, yes, from 9:30 you're gonna look after 7. Yeah, I mean, yeah, you should always look at what 9:30 to 10 does. For 9:30, I'm assuming he's gonna get there, but
really in the
we'll
things
see if
I'm
he talks
teaching.
about it.
They were
If
just
not, then just use the old teachings.
in my coming up.
9:30. So you'll use 6:30 for. No, you use 6:30. I don't like that he says New York Open kill zone. I like to just call it pre-market. So pre-market being from 7 to 9:30. Call it 7 to 9 if you want. That's when you use 6:30. That's for New York Open kill zone. But for 9:30, if you're trading 9:30, you want to look specifically. The opening range is 9:30 to 10. That's definitive. And then you're looking at the highs and lows before 8:30, so like 7 to 9, right?
Just because I learned the idea of getting stopped out or a false breakout or a
But
stop
before,
hunt
let's ask
from
questions.
Street
Let's
Smart's
see if he
book.
even brings it up, because you might get to the next
Yeah,
opening
Larry Williams
range
talked
time.
about a stop hunt, but when he said there's this view of them guys did it to us guys, and he doesn't believe that. And he still doesn't believe that. And that's exactly what the market is. It's them guys against us. Okay? It's the people that are in control of the marketplace. They can
We'll break it down
manipulate the
again.
markets very easily. And they can paint these candlesticks that give you all of your Steve Nielsen ideas, all your supply and demand candles, all of your Elliott wave pitchforks that poke you in the rear end only. You can see it easy in hindsight, but you can't pull it out like I'm teaching you here. These are very, very specific, highly, highly specific rules. There's these things that you can do, and there's things that you can't do. If it's outside the rules, you can't do it. You can't do it. And by having these rule-based ideas around time, it makes things very probable. Not perfect, not every day, always winning in your hands. It just means that it's highly probable that this is what's likely to occur. Okay? So the New York open kill zone, it's a little bit of a different animal versus London or the equities opening range at 9:30 in the morning to 10 o'clock. This one here is a little bit more quirky because you have to allow for all the different instruments that are traded at this time of day. I mean, think about it. London, Germany, Europe, they're all still up. It's like their lunchtime, and United States, the lazy folks that are here, they don't want to get up and trade London. They're going to come up and they'll trade session like this. So they get active, and these algorithms will fire up and draw in through ignorance their participation for liquidity purposes. They'll use them for that purpose, and they end up getting beat up. And one of two things happen: they don't trade the rest of the morning. If they're smart, they just go and heal, or they go in and try to revenge trade during the highest volume, which is 9:30 in the morning to 10:30 in the morning, during the equities open. And they usually revenge trade there and blow their accounts or feed smart money even more. So it's a buffet, for street money to sacrifice themselves to smart money. By having this perspective of knowing what the open ranges are and how to use them effectively, that's what I'm showcasing here.
He's
You
about
can
to
see
get
it's
into
usually
some
illustrated
sauce,
here,
I think.
drops down and draws into the liquidity there.
Some standard deviation shit or something.
Need a UGC video for your business? Find me and many other skilled creators on Fiverr. Or
Hey guys,
Incidentally,
don't hate. Just watch.
back on October 30th, I gave you a tweet, and this is for the guy that was saying, we just had all these drops lower in price. Where were you at? And whenever I see that kind of stuff, all that is a big billboard sign they're trying to raise up. Look at me. I said something that ICT didn't say, or something to that effect, or something contrary, when the person really didn't pay attention, because I talked about how Bitcoin was going to trade below 100,000. Explore that. It's done that. A lot of people got hurt with Bitcoin getting really dropping aggressively. A lot of people, even some of my students that trade crypto, got hurt. Not all of them, but I know some of them because they reached out and told me that I got blistered pretty bad by that. And when I post things like this tweet here on October 30th, 2025 at 4:35 a.m., it's my local time, Eastern time.
What's this guy doing at 4:30, bro?
Might be time to take some profits in NQ. If you look at how it's anchored, it's here and it goes right to that candlestick. It's the highest one. Okay. On intraday,
Oh, this guy called
on
the
London
top,
chart,
bro.
that's where the tweet was posted right there. You can do this on your own chart. Just go to Twitter or X, find my tweet when I post something. Click on the share button and copy the link, and then go to TradingView and the right mouse button, click on it, and then post.
This guy's
or
open
paste it
for
back. And it'll
every
drop the actual
low
tweet
resistance
right on the
liquidity.
candlestick that I made it. Okay,
He's always awake.
it's not coincidence that as I did that, we were trading at the consequent encouragement of that wick that formed from the opening to the highest high that day. If you know what you're doing, you can do it intraday before the day even closes. So everything at
Did
that.
you hear that shit, bro? This is the shit I was gonna say earlier in the stream, but I didn't really understand it. He's basically predicting the next candle rejecting off consequent encroachment of the current candle that's forming.
Price level here.
Yeah, that's crazy shit,
Price
bro.
should no longer want to explore the upper half of that. Go in your own chart and see if it does or doesn't do that. And the market shows wild displacement lower. They come back right here, gives you
We
false
talked
hope.
about that shit in 2023, bro, and I was like,
And then
they didn't
just
want to put
left
this
it
in my
over.
notes.
And we traded down
I don't even think
all the way
so.
down to this 24,700s. But we were up here. So that's a pretty significant drop. All I'm trying to do is protect you. When I talk about things like this, they're huge warning signs. Okay, to just be mindful of it, because they're not small moves that are coming. I'm not talking about a 200-point move, a 300-point move. They're significant price runs. I told you the same thing with gold. And I'm not here to beating my chest, but I told you it's probably time to take some profits in gold. And gold fell out of bed hard. This is something that experience gains over time doing it. There isn't anything in particular that stands out as any. It's just because of my experience. I see when I look at social media, when I see the cowboy up mentality, they can't do anything wrong. They're making so much money. It's going to keep going higher. When everybody gets opinionated, one-sided,
That's
and
what I
all the
thought.
focus is on the market, one individual market, you're really close to an important high. And knowing that and then applying it to the
I
things I'm
had
teaching
YouTube
here with all the
Premium,
details with
but then
premium discount, consequent encouragement,
I don't know what
equilibrium
happened. I think it
ideas,
like ended or
and
something.
how the daily candles form,
I gotta get it
like
again.
you're seeing here. All of this was done on the actual high candle after it took the previous day's high out. That's what you're seeing. A run above the previous day's high, down goes. That's how gold topped too. It took out the previous day's high, false breakout, dropped down a lot. And if you bought up there and held on to that, man, you got murdered. You got murdered.
Bought up there, bro.
So when I post these types of things,
bro.
okay, I don't want to come back and say,
Market
see how
can
smart I was.
fucking
I want to
get
be
you,
able to
bro.
hear, wow, I really could have got hurt, and I'm glad I took ownership of what I was doing and managed my risk better than I would have if I wouldn't have seen that warning sign. That's what I'm doing.
He didn't get into 930.
Okay, that's what I'm trying. I'm trying to protect you, not make you rich. I'm trying to protect you, because if you stay in this long enough, you'll learn what I'm teaching is the best. It's the best thing that you could ever have, the best way of looking at the price action, and you will be able to do whatever you want to do as a trader, and you won't care about anything else I teach, because once you find your model, you'll be in
You
where
trade
you
trend lines and see this shit. It's a trend line retest. Thank you for continued interest. All right. So, where are we at? So, good lecture as always. We are working inside that daily volume imbalance. If you know what you're doing, you wouldn't be trading right now. Listen, everyone's different. Let's not we don't gotta jump to any conclusions or anything. Everyone's different. So it looks like we're gonna take that sell side from previous day's low. We'd want to see, although ES is a lot more bullish. I'll be honest. Look at ES, guys, compared to NASDAQ. A lot higher up. Still inside that volume imbalance. But what we want to see, and what we would want to see is a dollar, first things first. You see, dollar's also moving lower, which is why I'm a little bit skeptical that NASDAQ's not moving higher. Looks like dollar's leaving a breakaway gap in here. Dollar is trading inside that weekly bullish fair value gap, though. So dollar inside that weekly bullish after running the buy side. And if we look at the YM, is that? Oh, don't tell me YM's trade. Yo, this shit is cooked. Yo, I'm gonna be honest. I don't know. Everything is out of sync. ES, NQ, dollar, all going lower. NQ leading. YM's going higher. And Nvidia's falling lower. Nice. Stocks are going lower. Nice, nice, nice. It's good stuff. Good stuff. Good stuff. Consider all these trades gamble. Yeah, listen, everyone's different. There's no point in even comparing and contrasting what someone else did with what you did. Who cares, bro? You know, literally, who cares? It doesn't affect you. Let everyone do their thing. You know, unless they're asking for help or advice, and you know, you want to maybe guide them or something. Yeah, I can review your notes. I think the main takeaway from those notes is simply understanding the first presented fair value gap and the importance of the opening range. Do you use VIX? I personally don't. I just kind of know when to anticipate the volatility and then just go with that. You agree with that? Yeah, man. I mean, listen. There's always a reason to go long or short. Okay, there's always going to be a reason to do something. You know, maybe someone said, "I saw the failure swing here, and then the inversion." This is assuming they're an ICT trader, right? Some people don't even trade ICT, and they're doing their own thing. Maybe they saw this and they were like, "Yeah, I'm bearish. We took the high, failure swing. Looks like there's an SMT here as well." They probably saw all this and they're like, "Yo, this is a great short." For them, sure, that's fine. Maybe it is a great short for them. Let it be a great short for them. It can be the worst short for you, the best short for someone else. That's the beauty in ICT. We can all trade differently and make money. That's the real sauce for the electric. Can you show me that note from the inversion? Yes. Did I screenshot that? I don't think I screenshotted that. Let me check. Yes. It's as simple as this. If you're bearish and we put in that bearish fair value gap, if we're bearish and we put in that bullish fair value gap on that candle and then inverse it, you often see speed in that specific time. You know? That's when you usually see this signature where it's like a opening range Judas swing. Just this little rally right here. Blue Judas swing. And then when we get below that fair value gap and we're in a lower just liquidity condition, that's pretty... He did say it's 90%. I cannot verify if that's 90% London or... So where would you enter? You can enter on a retest or you enter just down here with a stop loss. Your stop loss would have to be here. Your stop loss would have to go all the way up here because now you do want to see this stay open. It could definitely go up and trade that though. So should we do a little bit of a back test? 90% seems to be too much. Yeah, but you have to understand when ICT says 90%, it's going to be different than when we say 90%. Because we can't just go back with opening range, inversion, that's the one. No. When ICT says 90%, it's way different. When ICT says 90%, what ICT means is I understand the narrative that we took out the equal highs and buy side. I understand the sell side that was engineered here. I understand that London was likely to go lower. And I understand the displacement here below this low that offered the inversion fair value gap that had to be right there as the first candle. Overlapping, you know? You get what I mean? He understands, like, when we see a setup, we're going to count it as like, oh, this one counts. But it doesn't really count, you know? It's like, when ICT, I mean, it makes sense because like he knows which ones to fade and which one to not. That's the idea. Obviously, bro, imagine you were doing this for 33 years. You're obviously going to know, like, there's going to be times where we see a setup and we're going to be like, oh, yeah, this one counts. But for ICT, you'd be like, what the fuck is this terrible ass trade? Like, I would fade that shit. I would never take that, you know? It's just the reality of it, you know? We're not able to see it that good. We can do some back test, though. Equity Edge, I've never used them, but I know of people personally who use them and had no complaints. So if you want to go with them. I would just use Alpha Capital though, because that one I can vouch for. All right, let's do. Yep, it's the video he uploaded an hour ago. Let's simply do last year November. Let's just do a week. So we'll just go to 2024 November, and I guess we can do this week. Let me open up the economic calendar, see where we're at. So if you guys want to do some backtest, does anyone actually want to watch this, or should I just do it on my own? So we'll skip the 11th. We'll go to Tuesday. Does anyone plan on staying and watching this, or if someone actually is going to find value, I'll stay. Otherwise, if not, then I'd rather do it myself. I'll probably trade better. November 12th. 15 is the CPI. So Wednesday's a CPI. Thursday's PPI. Okay, and then Friday. Sure, I'd watch. I'm watching. We want to watch. Okay, we can do some back. I have $20 left. Do I have full point news? Yeah, I'm going to be honest, bro. Straight up with you. All right, we'll do 1 week of just really solid backtest. We'll do the week of CPI. Give ourselves 100K. And Q. OES. Let's get YM in here. And let's get dollar index. We want to do this properly. I'm not even going to give this a title. It's probably going to get deleted. But we'll start that. Oh, shit, I got to give it a we'll just put it November 11. November. Week 2. All right, I am OCD, so you guys are gonna have to watch me change all my chart colors because there's no way. I'm about to trade like this. Matter of fact, I'm gonna have to go get the exact same chart colors that I'm using. It's just how I like to do it. Can't take the backtest seriously unless I do it like this. Don't be discouraged by all this stuff in here. We'll probably walk with a setup like this. Get the background in here. All right. We'll let that load in. It's a little bit slow. And we'll skip to, I mean, do you guys want to practice the opening range stuff, or should I just do my model? You take your time. What time do you use about opening range? Opening range. So you guys want to practice that 6 a.m. in London stuff? Your model, opening range. A lot of people saying that inversion on open. Well, we can just like keep that in mind. But what I'm saying is, what time frame? What time do you guys want me to backtest? Do you guys want me to backtest like 9:30 open, or do you guys want me to practice like 6 a.m. London session type stuff? London, 9:30. 9:30. Okay, you know what? There's too much for the video. We'll just do both. Fuck it. We'll just do both. We'll fast forward through the London. I want to actually take the trades, but we'll study it. We'll start with this. So, doing exactly what ICT said. 130 to 2. I think you can already see it. Yo, it's just good. You can already see it kind of play out. First day. So we'll just study it. I want to actually trade it. This is also like we already skipped ahead. But the idea is pretty much there. We take out the buy side here. And then you wait. Where's the market structure shift? Boom, right there. Now, everyone's going to say this one failed. Yes, this fair value gap failed, but it didn't really fail because even though you enter on this fair value gap, as ICT teaches, you don't put your stop here. You still have to cover your stop. So, right? And it's worth it because look where the sell side is. Look where the sell side is. It's insane, right? It's a Riri, but you just gotta understand this. It's not. It looks like a Riri, but it's not a Riri. You know what I mean? Like you just have to have a good stop loss placement. You can't put your stop right here. You know? Maybe that's hindsight, but I would personally view this as like you just gotta know where to put your stop. Like maybe on the breaker. You gotta put your stop on the breaker. Anyway, this is your opening range. 2 a.m. comes. This is the inversion he was talking about right here. Now I may be mistaken, but you can definitely see the damage done here. You can definitely see the damage. For that, do you have to know the bias as well? Well, you can just play the range in here, I would assume. So look what happened before. We had a sell side engineered here, and we took buy side, which is here, right? So I always tell people, wherever we're accumulating, you have to ask yourself, where are we accumulating? We're accumulating above the buy side. This is all accumulation above the buy side. Once we break lower, then it just depends on your model, right? This is where you take the standard deviations, right? And I can't tell if there's a low there. Yeah, no, there isn't. So this opening range stuff, if you trade this, again, it's all stop loss placement. If this is your target, right? No, like it depends how you want to do it. I'm not gonna sit here and act like the first presented for value is always gonna be the one that it's still you still have to have good stop loss placement. Maybe you want to wait for a premium entry. Maybe you wait for the breaker, which right, the breaker's right here. Did that get invalidated? No. The breaker held absolutely perfectly. So however you want to do it, I don't know if you want to call it a first presented breaker, but I mean in reality you'd probably use like this for value gap, wouldn't you? Isn't this kind of the one he was outlining? The one that was leading up to formation of breaker? If not that one, then this one. Right? This one is inside the breaker. Now really this is your breaker. So as long as your stop's above the breaker, you see that sell off. Anyways, that's opening range stuff. I should teach this to 2 chains. Yep, if I'm running the code, if you're running the code, it has to engage with sell side, no? That for first presented, yes. So which one's your first presented? I would say this one. I would personally say this one. That's how I understood it. Or maybe you'd even argue it's this one. I don't know. But I think the premise is there because you just got to know where you're going to put your stop loss, right? Especially because this ran away pretty far, right? This like one-sided leg lower. The retracement's happening a lot later is what I'm saying. It's not like we got a fair value gap and then we traded into it and then left. We really ran lower below the low. And then now you got to expect that retracement. So when you're expecting that retracement, you got to know where you got to put your stop or you sell it on the continuation. So that's how I see it. Anyway, that's your opening range stuff. That's a high RR trade. Yes, if you use my code, let me know. Anyway, let's skip to, I'm hoping this AM session should be 9:30. Yeah. So we're going to skip to 9:30 here. We'll clear that up. Hopefully that's a good study for you guys. I think CPI is tomorrow. That's not 9:30, bro. We missed the day, guys, unfortunately. I don't know why that glitched out. But we'll just study quickly. Yo, what a beautiful day, bro. Yo, this day is absolutely beautiful. Whoa. I'll be honest, bro. That day is beautiful. I just say that because 9:30 just beautifully opened up, reversed, and then we got a 10 a.m. reversal all the way back up. Anyway, I'm not gonna whatever, even get into that. It should say start of New York AM session, New York time. If I click here. Oh, why is this getting? Let me not. I want to cheat, bro, but why is it doing that shit, bro? This shit should be 9:30. Why is it skipping to me some random time? Next session. If I click start a New York session. Oh, I'm in UTC, bro. Wait. What did I just study, bro? We gotta go back and verify everything I just said. Because I don't even know if that shit was the right time, bro. Hold up, hold up. This shit may be way cleaner than I thought. My bad, guys. My fault. My fault, team. That one's on me. That one's on me. Yo, we don't even get a fair value gap in here. I mean, we get this one. We get above it and take the buy side. That's a good study, I would say. Is that not? Equal highs. Equal highs. 130 to 2. It's got to be this one. That's the one that sets the stage to run lower, right? And then obviously, once we take out the lows, we deliver that one higher. Now, if you wanted to use the bullish one, this is your market structure shift, right? That's your market structure shift. That's your fair value gap. So if you waited for that, it's both work, is what I'm saying. Notice that they overlap too. So that's pretty strong, I would say. So for anyone who's worrying about those opening range stuff, right? All that opening range stuff. So however you want to view it. I think the equal highs here is not something you can ignore, right? That's got to be your draw. You play that range. Anyways, let's go to 930 now. Oh, I guess we can do it again for 130 today. So again, I'm personally never going to trade this time. I'm going to be sleeping every single time. But let's study it again. 1:30 to 2 a.m. So what happens? We take out sell side. Right, we take out sell side. We have buy side here. We have a lot of buy side. I'll be honest. Really, this is a market maker buy model. If you know, then you know. This is your original consolidation. That's your smart money reversal. So where is your first fair value gap that leads to the market structure shift? That'd be this one right here. So we trade into that. We do go below. Rally. Oh my god, this is the inversion, yo. Yo, ICT knew some shit. He knew something, bro. This is the exact same inversion last year at this exact date. That's the same inversion where he said if it's right there and you know the narrative. Yo, am I tripping? Why is London session opening range giving such high risk to reward, bro? Like what? What are we doing here? Bro, even if your stop loss is like all the way here, we're just casually giving like 4R trades? I guess it took 2 hours. Like, what is this? Since when does it look like this? Like, yo, London is like giving out like, this is like prime 10 a.m. reversal stuff. God damn, look at that CPI count. Anyway, let's do some backtest now, guys. So, okay, this is not an easy daily chart. You don't really want to be bearish. But what I personally see here is I see this high. I see the fact that we did not get to 50% of it. We got real sensitive there. And the same thing with this. We got to 50%. We got real sensitive. In my opinion, I think we can run to the daily low here. Not looking like the cleanest day. But in my opinion, I think we can run to that daily low. We did leave equal highs, unfortunately. Yeah, it's not the cleanest price action. We'll have to give some time. I'm going to go into the day looking for that daily low. So I'm going to wait for a fair value gap to form in here. We're getting quite sloppy. Actually, let me look at the dollar. That should help me with narrative building. So dollar seems pretty bullish. So that works. YM. Also, YM's all the way down there. So YM's weak. It looks like we are likely to go lower. I don't want to mark the discount wick, bro. I really don't want to mark. I saw it. I saw it. Didn't want to mark it. I'll do a faint marking just for you, bro. Just for you. It just makes the chart too messy for me. All right. So we're working inside that wick. I'm liking this as a potential run to sell side. It's kind of sloppy though. But these equal lows are clean. Not enough risk to reward for me to take this. But like something like this, I would just tape read that. I wouldn't take it. Yeah, thank goodness. We do get sell side. It's kind of just chopping down. My eyes are still down here. But damn, so it looks like we go straight down. We actually left equal lows. That looks like a good protraction model. 5-minute fair value gap. We get an inversion. We don't get the inversion, but we close below 50%. I could rock with that. We'll just do 10 for the simplicity of 10. We rejected off 50% of, that's $6,000. And then we'll look for, we'll look for an extension target. What was I gonna say? So we respected off 50% of the daily quadrant. Let me clear this up. I can't clear it up, then you guys won't see it. All right, let's move this. 50% of the daily discount wick. That's right here. We got below it. Traded up into this order block. There's also a 5-minute bearish fair value gap in there. We're also at 10. The timing is not that good, but we do get the inversion fair value gap. Sorry, not the inversion, but we do close below 50%. So I'm viewing this high as likely to be protected. And this low is low-hanging fruit, in my opinion. And really, I'm going to put the stop right here, just to be a little bit extra. And I think this low is low-hanging fruit. That's previous day low. I think we can go lower than that. I'm going to check out the ES. Yo. What the fuck? ES is... Why is it all the way over here, bro? Alright, I guess we're just using NASDAQ. And for targeting purposes, I think we run this on a 0.5. Because I don't really see much. The only really thing I could aim for is 25%, which we're already at. CE is right there. We could throw it down there, see what we get, and let's study this trade. You'd want to see 50% offer support, and you'd also want to see this fair value gap stay open. But right now, we're just doing our thing. So we're all respecting 50% there. If we get below this low, I'd move stops. We do trade into that fair value gap. Going pretty far past it. I'm tempted to just close the trade early here as we retrace. We are inside that OB. I wish I could see what ES is doing, but I can't. No, this wouldn't be a valid protraction long because, oh, we did respect the 2-minute in there. Yeah, I'd probably just close manually here. Just take the 2.9K loss. I mean, there's no risk management here. I don't think that's a trade I want to hold on to. And we can always re-enter. Get to the right time here. 1, 2, 3, 4, 5, 6, 7, 8, 9. All right. Looks like we are moving lower or potentially consolidating. Yeah, very choppy. Okay, so we got a nice retracement, 15-minute gap, 1-minute inversion. It's 10:30 now, so 10:30 power 3 plays a role in this. We got the inversion suspension block. I'm gonna retry. Whoops. I'm gonna retry the short idea. Stop above the OB. I think we want to risk 5.9 every trade, I guess, so we'll just go for that again. Throw that down there. Wow, we got stopped out immediately. One candle. We're just gonna play this forward, see if it delivers. What I would want to see here is if ES took out this low, because we left equal lows on the previous day's low. Looks like we're gonna have an inside day. It's a pretty choppy morning session, so we'll probably trade lunch. What time is it? 11:45. I want to trade the lunch session because of how choppy this morning session was. But I don't know. We'll see. Yeah, I'm liking what I'm seeing here. I feel like I would try this short, run above the buy side here. It's a lunch short, but I want to try for risk reward purposes. If we can get those equal lows. Oh, looks like we're wrong. All right. We're just going to skip to the next day. See what ends up happening. So we just... Oh, what did I skip to? Okay. No, it looks like we were wrong. So we really just left those equal lows. And I think we'll have to target that another day. Let me go to 9:30 open. Where's 9:30? This one? Cool. It's PPI. We still have those equal lows. The daily chart's getting real choppy in here. Getting real choppy. We had pretty much it's not really an inside day, but it looks like an inside day. I like the daily volume imbalance in here. I'd want to see that deliver prices lower. I still like those equal lows. We have PPI. So, do we have a run on buy side? We're going to have to wait for a run on buy side before lower. That's low hanging fruit. And we'll see what 9:30 does. Okay. I like this as a potential Judas swing. I wish I could see what ES is doing. No, I'm not trading today, brother. I like this 15-minute bearish fair value gap. Price stops right at the volume imbalance. This is your first presentation fair value gap. So what I would do here is go to the 1 second chart. Watch this candle print. And I'd probably sell it there. Taking that volume imbalance into consideration with the equal lows there. 15-minute fair value gap, equal lows. Lows there. Very nice speed. I kind of just want to leave. I don't know if there's an SMT here. So I'm going to close the trade. I don't know, it doesn't... Bro, why is ES not doing its thing, bro? Anyway. So simple idea. 15-minute bearish fair value gap. Order block. We respect. First presentation inversion. We also respect inverse this fair value gap here. Pretty good confirmation. Trading that speed. And I want to take a partial here of 8 below that sell side. I'm going to throw this down here. I'm going to move the stop to the top of this inversion. And we'll see what we can get. Okay, I'm going to take another partial there. And we'll leave one runner for those daily lows. I'm going to move the stop some more. I'm going to add to contract short. Stop is still going to be break even. And we get stopped out in profit there. So pretty good trade idea. We'll see. Yeah, so we do end up getting those lows. I could have been more patient with the stop loss, but it's fine. No biggie. I wouldn't want to look for a reversal or anything. In fact, would I re-enter a short here? I wish I could see what the other indices are doing. Can you help me out? Can you give me a headline for the ICT lecture? It's opening range study. You trade? No, I don't trade bank holidays, brother. It's bouncing off the -2 standard deviation, twin. Not sure exactly what you're talking about. I'm assuming you're talking about this. You taking something? No, I don't trade that. Personally, I don't trade bank holidays. Um, yeah, just opening range studies, advanced concepts and opening range. See if we get a 1050 macro protraction. We'd have to break below, forming a breaker. Yeah, I would try. Oops, I clicked buy. I would try this. Risk some of our profits on the day. Try that there. Want to find a way to move the stop. If we can break below that low. Realistically, I probably would never hold a trade this long, but if we can break below that low, just take the L there. Damn, I think we had the right idea. What time is that? 11:45. 1050 macro absolutely sucked, bro. It's like the most. Uh... Wait, how are we already on Thursday, bro? I think we take that long too. To be honest, play that range to the buy side. Being that we're in a daily contraction. I mean, today is a 6.9 day. Now I probably wouldn't take this trade. I take it back. We'll just tape read it if it goes higher. I thought we were way more consolidating than we were. Okay. Yo, Friday sell-off for the win. Holy shit. That's our objective hit. You get 50%? We have CE, but yeah, I'm gonna be honest, that's already really, that's a crazy sell-off. So we're gonna have to be real patient. Skip the first 30 minutes. Oh, we're just gonna continue selling off maybe. Honestly, this looks like a trend day. I feel like I would take this. Maybe take it on half risk. I don't know if I partial there or break even. I think we just break even and pray. And see if we can get a just continuation sell-off. Yeah, that's nice stuff. That's nice stuff. Close that there. Just because of the trend day, the protraction model, 950 macro. I literally posted a TikTok recently how one of my best models is my 950 just my macro protraction. If it forms, bro, you gotta trust that shit. How's the new ICT lecture you backtested? We studied it. Not really, like I'm not gonna practice trading it, but we did study it. It seems to be pretty good if you trade that time of day. Here's another example of it. We'll just study today's price action. So for those who were there for the lecture, I'll do this and then we'll call it a day. I kind of want to go back in the lab, do my own thing. So this is your opening range. We got the sell side here. Now, let me zoom out a little bit because maybe missing a bigger picture. No, it doesn't look like it. So we've obviously been really heavy bearish, right? Really heavy bearish. So wait for that market structure shift. I don't think we even get it here, to be honest. We don't get it here. I mean, this one overlaps, but we don't really get a clean. I mean, not one that I would use personally. It doesn't look too obvious. Because there's no market structure shift lower. If you wait here, you get a break there, and then you get this fair value gap, and that one seems to deliver very nicely. Again, yes, we inverse it, but remember, where is your stop going to be? Your stop has to be here, right? That's the rule of the fair value gap. In fact, it has to be a minimum here, or you can put it here. So even if you use the minimum stop requirement for a fair value gap entry, this one would also play. That's your first market structure shift, so you could use that. It's very nice stuff. Yeah, it's cool. It's very cool. Anyways, well, I appreciate you guys coming through to the live stream. We're ending whatever that is. For a backtest, nothing crazy. I will see you guys live tomorrow, exact same time. I appreciate you guys coming through. Good study. I'm going to go study on my own shit now. I got a lot of stuff I want to get done. But I appreciate you guys coming through. I'll see you guys live tomorrow. If you're trading the rest of the day, please be careful. If you use my code for Alpha Futures, please let me know so I can add you into the giveaway. Should I make a Discord study group? Could do that. Could make like a separate section in the Discord. I'm gonna quickly just look at what the Nasdaq did. I want to see if we're trading at that low. Okay, so we're still working inside that daily volume imbalance low. ES is just kind of consolidating. Like this is kind of like, in my opinion, just like red flag. Like I don't want to say manipulation, but like Nasdaq's going way lower than the others. So I'm a little bit skeptical in this price run. I don't know if I trust it completely. Little bit skeptical because YM, if you take a look at YM, we're making crazy higher highs today, right? If you look at dollar, why is this not dollar? If you look at dollar's been making lower lows. So, and ES isn't all that bearish. So I'm a little bit skeptical in Nasdaq doing this. I don't really trust it. I think it's just volatility manipulation. But who knows? I guess we'll have to see. Like ES is not going lower. The only thing that's really diving is Nasdaq. So either Nasdaq leads, but in my opinion, I think it's just manipulation because YM's higher, dollar's lower, ES is sideways. It's just Nasdaq going lower. So that's my opinion. I still think we're bullish, but we'll have to see by the end of the day. And I'll see you guys tomorrow. Peace. Have a great Tuesday.